Hello and welcome back to the Fail Breakdown channel. It's Thursday, the 19th of February, and today I'm going to be talking through a couple of fail breakdowns. One in the pre-market of the 68.72 level, which was the afternoon low from Wednesday, and another one a little bit after the open at 68.61 that was already the prior day's low if we're just looking at the regular trading hours from yesterday. So very low volatility, choppy day today. So a lesson in trading that kind of session for sure. We've been spoiled with some decent volatility recently, so we were probably overdue for one of these sort of 30-point chop, low volatility range days. But if we follow the system, it's easy to come out green. As ever, just doing my best to relay the method taught by Adam Mancini. I would always refer you to his newsletter. Become a subscriber, you'll learn a hell of a lot more than you will from watching these videos. With that said, let's get into the charts. Just me today, so sorry you haven't got Mayank to add his expertise here. So this is a 15-minute chart. We've got Wednesday's session on the left here. These blue bands are indicating kind of the morning session and the afternoon session, and from both of those sessions we set a couple of significant lows. Firstly, 68.61, which bounced about 65 points up to the higher day yesterday, and then in the afternoon session, a little bit before the close, from 68.72, we bounced up. Far did that go? About 40 points up to the high during the London session, and then shortly after the London Open, which is this grey area, we put in a pretty scary flush, 40 points straight down, flushed the 68.72, weren't able to even threaten the prior day's low here at 68.61. And then set about the process of reclaiming and accepting the level. For me, this was pretty straightforward execution. It was one of those, I woke up, when I woke up and checked price, I saw the level had reclaimed. To me, it looked like reasonable acceptance that had occurred here. Kind of a combination of things, really. We got like a little bit of type 1 and then a good swing of type 2. So, where's my pen gone? Come on. What's going on? Okay, there we go. Got the pen working again. So where was I? Yeah, just talking about the acceptance of this 68.72 level. So we flushed down about 6 points. Nice scary flush, 40 points off the high in a straight line. Reasonable, shallow but reasonable flush depth. And then started the process of returning to the level, dipping, returning through. And then I woke up right on this candle, and I read this in the moment as a nice bit of type 2 acceptance where we'd recovered the level, dipped beneath it, and then returned above in combination with clearing the danger zone. So I took my entry right around here at 68.77, got one level out of that, up to about 85, I think, was my profit take on that. So pretty straightforward. I mean, the telltale sign was really that big wick on the 15-minute. If we drop down the time frames, we can maybe see it a little more clearly, as this is 2-minute now. Wrong way. So this final sell here, nice quick trap below for one final time. Had this continued on down and threatened the low, then obviously the trade would have been invalidated. Sellers were unable to lose the original flush low, and then we returned straight back up, cleared the danger zone, held here for a few minutes, and then took an entry in. And I was in that trade for about a minute before it popped to the first level. Happened pretty quickly after I was in. I don't think my head had even left the pillow at that point. So nice, easy trade on that one if you were up early enough to catch it. Unfortunately, the runners trailed out there, so that left me flat coming into the pre-market. Let's go back to the 15-minute here, and you can see things were looking pretty choppy during the pre-market, and so I was very wary of this. This is on the 15-minute. Um, just having a lot of bars stacked side by side. But we did trigger another failed breakdown off the open. I missed this trade. Kind of a combination of things. Obviously, I was in profit protection mode. I didn't like the chop, and there was kind of a multitude of levels within here, around the significant low. And by the time it looked good to me, the trade had kind of passed. And being in chop, I was extremely hesitant to chase anything. Now, with that said, it still was a valid trade. So if you had missed this trade, you could certainly get an entry there. So let's drop down the time frame and go and take a look at the entry here. All right, so we've got our significant low. We bounced off of it in the pre-market, chopping sideways, and then right off the open, which is here, we flushed down pretty quickly. This is a 2-minute chart now. Ripped straight back up. Maybe a little bit of type 2 acceptance here. Held above the danger zone for a couple of minutes. And then there was a potential entry in here. For me, it kind of ripped above, and I was looking in here, and then we'd gotten up to 80, which was almost 20 points off the level. And so I felt like I'd missed it in that quick move up, and I really wasn't interested in getting in it back down here at this point, but there was a potential nice re-entry opportunity in there. But really, just look at these bars stacked side by side. It was extremely choppy. If you were able to trade it successfully, congratulations. It was a valid setup. It's just obviously lower quality, lower volatility trade. Okay, I've just dropped down to the 1 minute here, just to look a little more closely at the acceptance that happened around this 60, 68, 62 level. And so we got the flush, pop back above. We did have a little bit of the second type of acceptance where it reclaims the level, dips, didn't lose the level again, and then bounce. So you did have a potential entry in here using type 2 acceptance. For me, I was kind of watching the non-acceptance protocol here, and the trouble really was by the time it had been above the danger zone for a couple of minutes, we were up at 75 level-ish, somewhere in this candle. It's a 1 minute chart, and so I really didn't want to be chasing that far off the lows on a relatively choppy day. There was, as I mentioned, there was the potential maybe to get back in here as it bounced off the danger zone, but again, a tricky entry for me, so I just let that one go. And on that note, I'll just bring up some points from a newsletter earlier in the week, or a summary of some points from Adam's newsletter. This was from Tuesday's newsletter after the Monday holiday session, and some points he made about how to trade lower volatility chop. And so just running through these, be prepared to give things way more space and time than usual. That means being more patient on your entries, also being far more patient with waiting for your profit takes, and then also being more patient on the stops. So that's kind of actually like these 3 points really. This guy here. So what he was saying in the newsletter there was, he actually doesn't use limit orders for his stops. He used manual stops. And the implication there was you don't necessarily have to take a stop if it just wicks under the structural low very quickly. You could perhaps consider waiting for a 5-minute close beneath the level before taking that stop. Just something to consider. Obviously, that comes with more risk, so be cautious. But it's one way to avoid getting trapped and stopped out over and over again. But the key things are: do not overtrade, only trade from the edges, obviously the lows for us, and never chase. And that thing for me, never chase. By the time I felt like the entry was there, I was a bit late and decided just not to take an entry on that second one. So yeah, interesting session. Um, good to have a change of pace. Not necessarily good for failed breakdowns, but just to experience that. We've been having a lot of nice high volatility setups recently. Today was a lesson in on the other end of the spectrum. So always good to be prepared for these different types of days. And for me, that seemed relatively. It kind of seemed like it was setting up that way from the beginning of the day, from the pre-market. And as I say, having my green trade in the books, that's why I was a little bit cautious today and stayed out. But as ever, just congrats to everyone who profited today, and let's hope for a bit more volatility tomorrow. All right, thanks everyone. Bye for now.